Inflation, one of the scariest words to the financial markets. But why? What is it? What does it mean to us? A lot of my wealthy clients will call me and say they're worried about inflation. So I ask them, do you own real estate? They usually answer yes. Do you own a diversified portfolio of stocks and mutual funds? They usually answer yes. If you own real estate and a basket of diversified investments, then inflation is making you wealthier, not poorer, as these investments usually appreciate during inflationary times. Inflation can present a challenge to preserving wealth if you're a saver and not an investor. This silent eroder of purchasing power can diminish the value of money stashed away in savings accounts, as it is not growing alongside inflation. A dollar saved today does not hold the same value as it does in the future. But for investors, inflation can be a source of growth. How can this be? Investing can serve as a countermeasure to its negative effects because the effects of inflation on wealth are not uniformly negative. If you own a home or real estate, the value of those investments will usually increase while inflation is increasing. If you own a portfolio of stocks and mutual funds, the same will be true. By being an owner of financial assets, your asset values will historically appreciate with inflation. Investing is one of the ways to combat the adverse effects of inflation. The goal is to allocate resources to assets that not only preserve but potentially increase in value over time and outpace the rate of inflation. Here are several investments that can serve as hedges against inflation. Stocks. Historically, equities have offered returns that exceed inflation over the long term, serving as an effective hedge against the eroding effects of rising prices have on wealth. Specifically, expanding from 1926 to 2021, almost 100 years, the S&P 500 has delivered an annualized nominal return of 10.4%, with inflation averaging a bit over 3% during this time frame. Thus, the result is net returns of about 7.3% annually. This highlights the ability of equities to maintain purchasing power and contribute to wealth accumulation in the face of inflationary periods. Next, we have real estate. Real estate is often considered a solid hedge against inflation for several reasons. Increasing housing costs and rental prices can benefit real estate investors by providing higher rental incomes, which can be adjusted with inflation, offering a yield that potentially exceeds the inflation rate. In addition, there's usually considerable appreciation of the real estate assets at the same time. There's also commodities. Investing in commodities has been recognized as a potential strategy for hedging against inflation for some time. The commodities such as crude oil, natural gas, wheat, corn, and even gold can often see their prices increase in times of inflation, reflecting their intrinsic values in limited supply. It is suggested that a 1% rise in unexpected inflation could lead to a 6 to 9% increase in commodity prices, according to Vanguard, making commodities an attractive option for those looking to safeguard their portfolios against short-term inflationary shocks. And then, of course, we have real return bonds. These are government bonds designed to protect investors from the effects of inflation. They're issued by the government, and each bond sold is an obligation of the government to the bondholders. Their face values and the interest payments are pegged to the consumer price index and adjusted twice a year, making them a conservative investment choice during inflationary periods. Diversifying across asset classes. We need to recognize the importance of not putting all your eggs in one basket. By diversifying investments across stocks, bonds, real estate, and commodities, we can put to test the power of diversifying when inflation starts to rise. For example, while bond holdings may suffer during increased interest rates, real estate investments can provide a stable income stream, thanks to rental yields that are adjusted during inflation. In conclusion, inflation's capacity to erode wealth underscores the importance of proactive financial planning and strategic role of investing. By understanding the effects of inflation and employing strategic investment practices and resisting the temptation to make rash decisions, you can safeguard your wealth during inflationary periods. Reach out to us today for a meeting, either virtually from the comfort of your own home or in our offices, when you're ready to learn more about the effects of inflation on you and your net worth.